Smart retirement planning for 60-year-olds, secure your golden years. As retirement approaches, securing a stable financial future becomes crucial. A well-balanced portfolio ensures financial security while allowing for moderate growth. Get free Gold IRA guide and learn about how to secure your retirement with gold investment. Click the link below in the description to get it. Here's how to structure your investments wisely at 60. 1. Diversify your portfolio. Spreading investments across different asset classes minimizes risk. A mix of stocks, bonds, real estate, and alternative assets helps maintain stability while still allowing growth. 2. Manage risk wisely. At 60, risk tolerance is lower than in earlier years. Market volatility and unexpected expenses require a careful approach. A balanced portfolio with income-generating assets provides financial security. 3. Strategic investment allocation. A common strategy is the 60/40 rule, 60% in equities and 40% in fixed income assets. Adjust based on your needs. High dividend stocks, ETFs, and REITs offer growth, while bonds and annuities provide stability. 4. The role of bonds. Bonds protect wealth with steady income. Consider Treasury inflation-protected securities, TIPS, for inflation protection, municipal bonds for tax benefits, and corporate bonds for better yields. 5. Stock market exposure. Equities remain essential for long-term growth but should be chosen wisely. Blue-chip stocks, dividend-paying companies, and defensive sectors, healthcare, consumer staples, offer steady returns with less risk. 6. Inflation protection. Inflation reduces purchasing power. Hedge against it with TIPS, dividend stocks, commodities, and real estate. A withdrawal strategy that accounts for inflation ensures longevity of savings. 7. Real estate is an asset. Real estate provides income and appreciation. Rental properties generate passive income, while REITs offer exposure without property management. Downsizing can also free up funds for retirement. 8. Retirement accounts. IRA versus 401k. 401k, if still employed, continue tax-deferred growth. RMDs start at 73. IRA allows rollovers and broader investment options. Roth IRAs provide tax-free withdrawals. Strategy: plan withdrawals carefully to minimize tax burdens. At 60, a solid retirement plan balances security with growth. Diversifying investments, managing risk, and selecting the right accounts ensure long-term financial confidence and a comfortable retirement. Free Gold IRA Guide. Learn about how to secure your retirement with gold investment. Download your free Gold IRA Guide now. Click the link below in the description to get it. Thanks for watching. Please like, share and subscribe.